Gold itself, I think, is going higher. Now, again, it's going to vacillate. We've been stuck between 2,000 and 2,100 for a couple of months after making a new high. And I think that we'll make all-time new highs again this year. And I wouldn't be surprised to see gold get to 22 or 23 or 2,400. I mean, again, I don't know when it'll be, but I think that gold is going to go higher. I think silver is going to go higher. Listen, I think the metals are a place to be. And I think that every portfolio should have some representation of metals and physical metals, not paper, but physical. Because again, paper is, I don't think there's enough gold in the world to cover the amount of paper that's been sold. But I do think you should buy our physical metals and have them because I do think they're going higher. I mean, listen, we're going to have markets that are going to go up and down. And again, it's a good asset class to own.
Gold prices remained near a 2-month low on Thursday as traders weighed the impact of mixed remarks from U.S. Federal Reserve officials regarding January's higher-than-anticipated inflation data, which tempered expectations of imminent and aggressive interest rate cuts. Todd Bubba Horwitz, founder of BubbaTrading.com, shared insights into various topics, including the trajectory of gold in 2024 and the strength of the U.S. dollar. Despite short-term fluctuations, Horwitz expressed confidence in gold's potential to achieve all-time highs in the coming year, potentially reaching values as high as $2,200, $2,300, or even $2,400 per ounce. However, the optimism among precious metals bulls remained cautious after this week's warmer U.S. Consumer Price Index report. Notably, Peter Schiff pointed out that while the CPI data led to a drop in gold prices, it signals a bullish event for the commodity by confirming the Federal Reserve's inability to curb inflation effectively through interest rate hikes. Horwitz advocated owning physical metals over paper investments, underscoring the tangible nature of physical gold and silver as effective hedges against fiat currency devaluation. He suggested that returning to a system where a tangible asset like gold backs the dollar would provide a more accurate measure of its value. The United States ceased using the gold standard in 1971 under President Nixon, after which the dollar's value was no longer tied to gold. Additionally, Zimbabwe announced plans to introduce a gold-backed currency to replace its nearly worthless dollar, highlighting the ongoing debate surrounding the role of tangible assets in currency valuation. Join us as we explore the insights shared by Todd Bubba Horwitz. Stay updated by subscribing to our channel and activating notifications. Thank you.
You know, nobody talks about the problems that China has there. And I don't know if they have they're once again, as they let the people develop a middle class, they're now trying to destroy it again. Again, gold itself, I think, is going higher. Now, again, it's going to vacillate. We've been stuck between 2,000 and 2,100 for a couple of months after making a new high. And I think that we'll make all-time new highs again this year. And I wouldn't be surprised to see gold get to 22 or 23 or 2,400. I mean, again, I don't know when it'll be, but I think that gold is going to go higher. I think silver is going to go higher. Listen, I think the metals are a place to be. And I think that every portfolio should have some representation of metals and physical metals, not paper, but physical. Because again, paper is, I don't think there's enough gold in the world to cover the amount of paper that's been sold. But I do think you should buy our physical metals and have them because I do think they're going higher. I mean, listen, we're going to have markets that are going to go up and down. And again, it's a good asset class to own. And remember, you may sometime need it as a currency again, because with what's going on with these currencies and these phony central banks around the globe and the fiat currency, which is absolutely a worthless system, trying to benchmark commodities against dollars against each other, it's a scam. I mean, they can do whatever they want with them. All they're doing is giving the ability to devalue your currency in your dollars. I want to see Harrison Butker win the MVP for 300-1 in the Super Bowl. But again, it doesn't happen until the markets are ready to buy it. Remember, the gold markets, all markets are developed by buyers and sellers or price discovery, right? So until the buyers want to step up, I mean, the sellers can't just manipulate it lower unless they're willing to commit too much capital, which eventually then they'll get stuck. At the end of the day, the gold market's going to go up when the buyers decide to become more aggressive. And right now, they've been very passive. We've been seeing sideways action, and you're seeing the strong hands become buyers, push it up to a level of resistance. The strong hands come in, become sellers, and push it back down to support. And that's just the churning of any market. It'll break out eventually, and most likely to break to the upside. I think that this administration is trying to have a destruction everywhere, okay? They had a perfect ability to put the Ukraine-Russia conflict to rest and eliminate all these problems. They're trying to destroy the country the way we know it. They're trying to turn it into a Marxist or a communist country. So everything they do is not to the benefit of the citizens here, but to the detriment. And of course, again, the stronger dollar, look, the dollar trades like anything else. And whether they're weaponizing or not, again, it still trades against the other currencies. And I think that the dollar is higher. And why don't we want a stronger dollar? I mean, because it makes gold go down or because it makes the commodities go down? Look, if you want your commodity, you want to sell commodities at a price, you get a higher dollar, sell the commodities for a cheaper price if you really believe that's the case. I don't believe in that case. I think that if the dollar had an actual backing like gold, like it used to have, then we would know what a real value was instead of the artificial value that is put in by the Federal Reserve and the central banks around the globe.
One of the primary questions looming over investors and consumers centers on the timing of the Federal Reserve's first interest rate cut after 2 years of rapid hikes. These hikes have notably led to increased mortgage and credit card rates, impacting various sectors of the economy. Federal Reserve Chair Jerome Powell recently indicated on CBS News' 60 Minutes that the central bank aims to gain more confidence in declining inflation before considering a rate cut. Todd Horwitz holds a contrasting view, asserting that interest rates should be higher. He criticizes the Federal Reserve's decision to maintain rates near 0 or 1%, arguing that such low rates lack justification and should never have been implemented in the first place. The Federal Reserve's rate hiking cycle began in March 2022. As a response to rampant inflation, with policymakers employing this tool to curb consumer spending and mitigate rising prices. Initially, economists had anticipated the possibility of the Fed's first rate cut in 2024, occurring during its March 20th meeting. Given the current inflation reports and economic indicators, Horwitz contends there appears to be no legitimate rationale for the Federal Reserve to consider cutting rates unless such actions are part of a dubious agenda or scheme. Let's get back to the interview.
So first of all, we shouldn't have low interest rates. Low interest rates benefit the extremely wealthy. They don't benefit the lower middle class. Okay, the lower middle class isn't borrowing that much money. Okay, the wealthy, they can borrow as much as they want and they can get the credit. All you're doing is allowing the banks to over leverage themselves and force the taxpayer when they go bust again to pay for their mistakes. Rates are too cheap. They should be higher. There is no reason that we should have ever gone to where we went to. They should have never been at 0 or 1. And right now there's a line, the emergency lending rate, loan rate, the window, has never been this crowded with banks that need money from the Fed. So again, and if these numbers are accurate, okay, then they can never cut rates. They have to let rates go higher or we're going to continue to remain too hot. But it's being too hot with a very small amount of the population that can take advantage of that. So that's what's going on. You're now starting to see housing troubles because, of course, the rates are higher. The housing is not as liquid as it was. And you're now getting deals. Even on new construction, you're getting deals now. So they're telling you ahead of time that there's a problem. We've developed and created a monster with rates where they were because they do not let the free market discover where rates should be because they can be much higher if you let the free markets trade them.
We're only going to have some sort of pivot now. I mean, I'm not sure if you watched the 60 Minutes with Powell, but most are only thinking, come summertime now.
He looked like a bozo on 60 Minutes. He said, I don't know. Why do you use 2% of the target? I don't know. I mean, is that something that you want your Fed chair, probably one of the most powerful people in the world, to be on national TV and say, oh, I don't know why we use 2%. I mean, where do we get the numbers that they make up? Okay. Listen, the only time they're going to cut rates, in my opinion, is potentially right before the election. If Trump is the Republican candidate and they want to try to stick it to him, they'll cut rates right before it to try to improve the economy. Other than that, they're not. There's no way they can cut rates with the reports that we're getting on inflation and on everything else. There's no way they can legitimately cut rates unless it's a scam. If you're a believer in the numbers they report, you should go see a doctor and go lay on a couch for a while because the numbers are garbage. First of all, you want to talk about employment. Last year in 2023, the employment was 63% was either government or special projects that were sponsored by the government. That's number one. Number two, inflation is not coming down. They are reporting you numbers that are inaccurate, but nobody ever pays attention to the revisions. Next month, when they come out with the jobs number again, I'm sure they'll revise this one lower. If you draw a line at the upper middle class and above, they're not feeling the overall pinch. But those who normally go to work, those who are being laid off, are spending more money. And forget about the dollar amount because obviously we have inflation that has to account for it. but never in the history have we had this many people that limit on their credit card that can only make the minimum payment, which means they'll never get that payment paid off. So we're spinning and spiraling out of control into a disaster. Look at the amount of homeless people on the street. Look at the lack of employment. When you go into a store, you can't get any help. And then, of course, you've got all the crime that's now involved because of your president that doesn't care about anything. You've got Oakland, where they're shutting down In-N-Out Burger, which every other place in the world, there's a line around the store every single day you go there. Or in Portland, where Nike and Starbucks are closing stores.
Chantel Sheevan looks for gold to hit a peak of $2,400 an ounce this year, with an average price of $2,170 an ounce. Sheevan was the bullish gold analyst in the London Bullion Market's 2024 Price Outlook survey. With gold prices hovering near a 2-month low amidst mixed signals from Federal Reserve officials, what factors do you believe will be pivotal in determining the trajectory of gold in 2024? Share your thoughts in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.